let's keep it real. Since January 2025, I've grown my trading account from just over 21,484 to now over 26,000. That's over 22,000 gain in just 19 weeks. While the S&P 500 is down 10%. No crazy options, YOLOs, no overnight hype stocks, just disciplined trades, managing risk and compounding returns consistently. But I'm not gonna lie, I made mistakes too. One error last week almost cost me 100,400 if in the extreme case, my position, I was wrong. This is my real unfiltered journey, so let's break it down. Quick disclaimer though, this video is for educational purposes as well as entertainment purposes only. I'm not a financial advisor. Always do your own due diligence and make decisions that fit your financial situation. I'm just documenting my journey, the good, the bad, and everything in between. So the challenge that I'm undertaking, why am I doing it and why it matters? For context, I actually have said it on this channel that I started with a capital of $300. I think that was in mid-December 2024, and I wasn't taking it seriously trading in this particular account. And then this year, early January, I decided to actually take it seriously. That's when I added 15,000 US dollar account as my capital, which is just over 21,000 Canadian dollars that I just said is my startup capital. So over time, I've been able to actually grow that profit over the past, effectively, I would say the past 4 months, because I started actively and seriously trading on this in January this year. So to be clear, this isn't just about numbers. It's also about proving myself that with the right strategy, I want to see if I can beat the S&P 500. And we usually call it the market, usually referring to the S&P 500. Especially right now, it's crashing. It's about almost 10% down. And my portfolio, in this particular case, the trading account that I'm sharing with you, is 22% up without taking wild risks. So that's a almost 32% difference. That means in this case, if this continues, I will be very pleased to continue trading. So what have been the biggest lessons? One of the biggest lessons I have learned so far is that risk management is everything. Last week, my account was actually higher, and I made a mistake of accidentally placing 4 contracts on a trade for intact insurance when I meant to place just one. So that mistake, in total, actually, I had to take a 380 Canadian dollar loss, and I had $100,400 at risk in that particular case. I had to close the whole position, and I've done a video to explain what actually happened, and I'm gonna put it here so that you can see and learn from my experience if you wish. So even when you are doing well, one slip up can undo your progress. So I double check everything now, no exceptions. So what are the strategies that I've been using to be able to beat the S&P 500, or at least to just have this return that is better than the S&P 500 so far over the past 4 months? I've been using cash, secured puts, and covered calls. And essentially, these are options. So these have been working, and cash secured puts, I sell a put option on a stock I want to own. If the price drops, I might be assigned the shares, but I'm okay with that because I already got paid a premium to take the risk. Then covered calls, once I'm assigned and I have 100 shares of a security, I can now sell a call option at a higher strike price. If it gets exercised, I sell the shares for a profit, plus I get to keep the premium. But bear in mind that when I do my selection of the stocks that I play, I have my watch list. I've done research on those stocks. So these are stocks with very strong fundamentals. That way, whether I get assigned or not, I win. And I'm comfortable actually owning these stocks. So just a quick rundown of some of the plays that I took this week. So I did take a trade on Sophie. This has been a phenomenal play for me. I've been selling cash secured puts and writing covered calls on shares in another account where premiums are solid as well. I have shares for the other account, but I'm just choosing to share this trading account publicly. I like to keep my other accounts private. So I've been getting great rewards consistently on SoFi, and I had 10 cash secured puts for SoFi, and they expired out of the money. So I'm going to collect the $60. But even though I saw, and I'm going to share this on the screen, that it still says that the options are still 1 cent. Right now, maybe they will update, my broker, they will update, but I should be getting $60 for that week for the 10 contracts. So that's the thing, $60 by just having cash secured puts. If it had dropped to $9.50, I would have been happy to own Sophie at $9.50, right? Those 1,000 shares for the 10 contracts. So I also have been playing Berkshire Hathaway. I've started building a long-term position. It's still one share though, Berkshire Hathaway Class B. And this is the stock that is actually managed by Warren Buffett and his colleagues. I want to buy more shares because I realize that it's better to buy wonderful businesses, even though it's in that trading account on the profits that I make, right? I use part of that for the long term, particularly because most stocks that I want to own actually for the long term, they're actually down. Even though I have bought in other accounts, I think it's also another good thing, but I would still prefer to keep most of the money in cash so that I can avoid overnight risks, but also trade in it out. Aritzia, this week is also another interesting play. I did take a cash secured put with a strike price of $42, and I collected $40 premium because I closed the position earlier, even though it actually expired out of the money, but I was managing the risk. And I like that this stock, when I last checked it, they had no debt, no long-term debt, and that's something that I'm particularly fascinated about. Doing research and also doing cash secured puts on stocks that have strong fundamentals. So the key takeaways from this is that week 19 has reminded me that this game is about managing trades well. So I want to cut my losses early. I took a $16 loss for the Walmart cash secured put, and I'm fine with it, right? Sometimes, actually losses are guaranteed. You win some trades and lose some, but it would be nice if I win more trades, or when I win, if I win by a big margin. That's how you become a profitable trader. So I also like to take profits off the table. Once I see profit, I want to take profit because I'm not waiting to chase home runs. Most people lose money in trading because they risk too much trying to get rich overnight. I'm fine. For me, 22% return in these past 4 months is fine, even if it holds throughout the whole year. That would be extremely good for me because let's say if I had 100,000 that I'd put in S&P 500, it's easier, of course, uh, to look back. But it means if the S&P is down, let's say by 10% now, that 100,000 would be worth $90,000 if I sell. But the S&P 500 has historically been able to bounce back. Sometimes it takes many months or even years. But if I had been trading $100,000 account using the same strategies, of course, there's nuances that sometimes it might be scary to take up big trades. So I will see I'm growing gradually, but in that scenario, I would have made 22,000 on that 100,000. So that's just for you to see, that's a $32,000 difference in terms of the return between the S&P 500 and my return if I just magnify that for illustrative purposes. So I'm excited that I'm beating the S&P 500 so far by a wide margin. So I'm also learning that trading is a mental game. Trading It's so tempting to overtrade, to revenge trade, or to go all in one perfect setup. But the smarter move is to play defense. That's what I'm learning when I'm trading. I want to play defensive. And once I see an opportunity, I strike and take profits. Because even if you are up, one stupid mistake can wipe out all your gains. That's why I'm sticking to my slow and steady strategy, compounding small wins on stocks with real fundamentals. So my message for new traders as I'm about to wrap up is if you're a beginner trader, don't feel pressure to chase fast results. Build a system that works for you, backtest the data. It's okay to make some mistakes, but losses are guaranteed in this business. Start with stocks you believe in. Use tools like cash secured puts and covered calls to reduce risk and bring in income after you educate yourself on these strategies. It's not flashy, but it works, especially in a volatile market like this. And it's also important to adapt because sentiment might shift, right? So if I can go from 21K and now over 26K, while the S&P 500 drops by 10%, trust me, it's possible with the right mindset. At least we'll see over the long term. The S&P 500 is extremely difficult to beat, but that's why I'm taking up this challenge. So to wrap up and to come to the conclusion, so that was the update for week 19. I'm happy with the results so far, and I will keep sharing every win, even every loss in this particular case, and the lessons with you guys. If you found this video helpful, drop a like, hit subscribe, and comment below. What trades are you watching this week? Until next time, trade and invest wisely. And may the markets be on your side. Bye bye for now, guys. I'll see you in the next one. Take care and bye bye.